Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it's the final day of the trading session and we're starting the new September series from today itself. Historically, September has got good news for the markets, but whether or not it stands true this time is something that we will be watching out for. But yes, today the trends in the GIFT Nifty for now is showing a positive start for the markets. Some cues that we'll be watching out for the September series is that today we have the Reliance AGM, 48th AGM, and we'll watch out any comments which happens on Jio IPO plan, any expansion on the FMCG business updates, and of course its new energy vertical as well. And then we have your Q1 GDP figures. We'll be watching out on those numbers as well, following by GST meeting which will be taking place next month. And of course, you have your Federal Reserve's meeting where the interest rate cuts are expected, and that is expected to buoy the markets ahead as well. So all in all, a lot of cues in the mix, and the hope is that after a subdued July and an August series, September will bring a good news for the markets. But yes, coming to how the global markets have fared today, they remain quite mixed. US markets ended higher overnight, and Asian markets were mixed this morning as well. But yes, when we come back to home, like I mentioned, Reliance stock, that will be in focus ahead of its AGM meeting at 2 p.m. And some more stocks we'll be talking about later in the segment as well. Don't forget to drop us your stock-related queries and we'll take them up shortly as well with our market experts. For now, let's take a quick check of the top headlines, Sasa. Stocks on Wall Street end higher. The S&P 500 scores another record as Nvidia results assert the AI boom. Nasdaq rises over 100 points. Markets in Asia trade mixed as investors digest a slew of data from the region. GIFT Nifty is indicating a higher start for our own Indian markets. Crude oil prices rises as prospects of a Russia-Ukraine peace deal falls. Investors also await President Trump's comments that could include sanctions on Russia. Gold prices too hit a 5-week high on the back of a weaker dollar. The government is considering GST relief for the textile and medical sectors. Sources told CNBC TV 18 that the centre is also proposing GST on all drugs from 12% to 5%. The GST Council is set to meet on 3rd and 4th September. Reliance's 48th AGM to take place today. Shareholders will watch out for any potential value unlocking announcements or potential business updates. That's right. You know, if you look at yesterday's market, we saw that the volatility was on a higher end given that it was a monthly expiry day as well. Nifty fell sharply as 50% tariffs also kicked in, slipped, and in the past 5 sessions, if you look at Nifty, it has slipped already by 600 points itself. But particularly yesterday, it slipped below that 24,550, and whether or not today it holds that 24,500 is something that we'll be watching out for. But yes, the broader markets, they continued their underperformance, and among sectoral indices, IT and realty, that led the losses with over 1.5% declines. On the other hand, in a weak market, consumer durables, that sector stood out as the sole gainer. But yes, coming to the cues today, as I was talking about RIL AGM, that will be watching out for today. Some commentary on the Jio IPO pipeline, then clean energy vertical, and of course, on any business update that is coming in from its FMCG and retail businesses. That is what we'll be watching out for in today's AGM as well. Following that, we have the Q1 GDP print that will also be coming after market hours today. So we'll be watching out for that as well. But coming to the flows picture, FIs that stood as net sellers of the stocks worth about 3,500 rupees in the cash markets. Then DIIs, however, they bought stocks which was worth about 6,300 crore rupees in the cash markets. Coming to the put call ratio, that rose to about 0.8 from 0.7 levels in the previous session, and the stock that has been removed from the F&O ban, that includes the likes of RBL Bank, and no new stock has been added or retained in the F&O ban as of now. But yes, at the pre-open, let's take a look at how pre-open rates are stacking up at this point of time. While the GIFT Nifty trends were pointing out to a positive start, the pre-open rates are showing that the Sensex is down about by nearly 300 points. Nifty also has slipped below that 24,500 mark in the pre-open. But yes, we'll be watching out if there is a positive open in the couple of minutes. But yes, if financial freedom, that is your goal. Super Pro can be your superpower. You can get all the live trading and investment ideas from SEBI-registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp all in one. And right now we have a special financial freedom offer. You can get the annual plan for just 2,500, and which is down from 7,500 rupees. You can download the Money Control app and subscribe today itself to avail this offer. All right, with that, let's quickly get on board with a technical expert of the show. Joining me is Raja Venkatraman, co-founder of NeoTrader. Raja, good morning. Yesterday, we saw that the Nifty broke below that 550 levels. What's the next support that we'll be watching out for going ahead in the trading session?
Yeah, good morning, Lovisha. Thank you for inviting me to the show. So, as over the last few weeks, we have been seeing that the inability of the Nifty to really hoist its flag above the 25,000 mark. So, yes, it did cross the 25,000 mark, which all of us were anticipating, but that proved to be a point where more supply was introduced into the system. And in the interim, what has happened is that the selling has only intensified, and one of the key reasons for this has been the lack of participation from the other sectors, namely IT and banking. They have not been able to really weather the storm. And the storm is actually brewing outside, and it is becoming quite thick, and we are not able to really see through the storm. So, with this entire scenario, yes, you may blame the external environment, but then the domestic environment too is nothing great, and the Q1 numbers which recently rolled out has not given us any sign of confidence yet. So I would say that the combined effect is what we are seeing now, and this continued pressure could exist as far as I see. And I would say that the selling pressure should continue, and the supports which were broken yesterday, it's going to be a challenge to reclaim that until we see some semblance of the global news flow, the geopolitical news flow. All that is causing a lot of confusion, and that is what is inducing this bearishness at the moment. And if you also take a look at the option data, the sellers are having a very strong hold, and every rally is going to be a sell. And the supports which I'm looking at is closer towards the region of around 24,200 would be the first one, and 24,000 would be the next one. And the kind of Nifty was holding up, Bank Nifty was giving up. Now Nifty too is began to slip down the road, and I would say that that definitely is a warning sign for us. And those who are engaging in shorting should continue to look at that as an option. But then one should not be looking to buy the dips at the moment, because the market is definitely confused. So 24,200 would be the first support, 24,000 would be the next support. And in Bank Nifty, I see quite a bit of way down here, because the Bank Nifty, I feel that it can travel all the way towards 50 to 500. And Bank Nifty, I would say, is leading the declines at the moment.
Bank Nifty leading the declines at the moment. Yesterday, we did see that the Bank Nifty broke below that 54,000 levels as well. But yes, Raja, consumer durables, that did well yesterday in the weak market. Can we expect it to sustain gains in today's trading session, or how does this chart structure look like?
Yeah, see, when everything is falling, you and some sector, is managing to hold on. So we always feel that yes, that is a sector where you can run towards. But then one has to take a holistic view, and when you take a holistic view, then it doesn't augur well. So you got, if the buying is happening there, yes, the buying can sustain, but then you got to see it in the context of what is happening. And I would say that if you are a trader, then FMCG is a good bet to go long. But if you are an investor, I would still say that look at some more dips. I think that within the next 1 week to 10 days, when there is more clarity on the tariff front, on the interest rate cut, that is where we will start bottoming out. Until then, I think that every rally is going to be a sell.
Every rally could be a sell. Let's also talk about IT stocks that underperformed yesterday, despite some rejuvenation that it saw earlier in this week itself. Raja, what do you make of the IT plays at this point of time? Because plenty of brokerages have started to turn quite bullish on the counter.
Yeah, I would like to be on the contrarian side. IT, the index itself is not showing any signs of revival. Yes, we can, place a bet on the recovery here, but then the recovery which I normally track is the news flows combined with the price action, and they are not giving me any sign of confidence of a revival yet. So I would engage rather in a intraday or a 2 to 3 day play on the short side, because definitely on the short side there are a lot of opportunities, and all the IT counters seem weak at the moment, and the rally could only witness a sell-off. So it's not, according to me, a good juncture to get into IT on the long side.
Not viable at this point of time. Let's also talk about Nifty Realty Index that also underperformed yesterday, and we also have an HSBC note coming in on real estate where they're saying that the past 2 months the index has seen quite a good growth despite the broader market growth as well, and they believe that while large size apartments still dominate the market, there is some early signs which is visible in the weakness of very large sizes as well. What is your view on the counter for Nifty Realty Index, Raja? What do you believe? Can we expect an underperformance going ahead in the next couple of sessions?
Yeah, the real estate once again, and what is a non-correlated index, okay, with the Bank Nifty. But then it always takes a cue from Bank Nifty. So right now, Bank Nifty is weak, and when they are not showing any signs of recovery, it is reflecting on the real estate sector too. So the fall which we are seeing since July as is going to extend over the next few days, and I feel that the real estate stocks could be the decline could accentuate in the next few days. So those who are looking to go short should consider the especially the second tier real estate names on the downside.
Okay, let's also talk about Reliance Industries. The 48th AGM is going to take place today itself, where investors are going to watch out for any updates on the Jio IPO plans, FMCG expansion business, and of course the clean energy verticals, all of them in today's AGM itself. Of course, the AGM will be taking place from 2 p.m. tonight, 2 p.m. onwards, and we'll be watching out more on the updates from Mukesh Ambani as well. But yes, Reliance Industries as a stock, Raja, what do you believe? Can we expect some re-rating going ahead? Because from July onwards, the stock had entered a downward trend.
Yeah, so Reliance ahead of its AGM comes out with some encouraging news, and there has been a trend that ahead of Reliance AGM, you witness a up move, and then after the AGM is over, there is a correction that emerges. That has been the trend. So I don't know if the trend is going to get repeated, but then considering the look of the market texture, I would say that one should tread Reliance with caution. Yes, the overall structure seems positive, and I feel that there is a room to go higher because Reliance was the one which was holding the Nifty in the last almost 2 to 3 weeks in the August month. But what I see now is that with the overall scenario also not supporting, I don't know how much of strength AGM is going to give for Reliance and also extend it to the market.
Okay. Okay, Raja, let's quickly get on to your picks then. What are your top stocks that you're watching out ahead of the open?
Yeah, the first stock which I would like to recommend is a short in BSE. So both my views are in the direction of the overall trend which is on the way down. So both are the shorts. First is BSE. BSE has been consolidating, and the recent news flow is not very encouraging. And I would say that it can travel all the way towards 2050, and it should be a good intraday as well as a multi-day play with a stop at around 2250. So that should be a good play on the way down. And another stock which I would like to recommend is LICI, Life Insurance Corporation of India, on the downside. This again is a short at around 860 levels with a stop at 880 for a target towards 830 as a intraday as well as a multi-day play. So those who are intraday, you can choose your profit and book. But then I feel that it could become a good multi-day play in for the next 2 to 3 trading sessions.
Okay. These are the stocks that we need to watch out for. Let's also take some stocks in focus ahead of the market open. Of course, just 17 seconds left. CG Power, that stock is in focus as the company said that its subsidiary has launched its first outsourced semiconductors assembly and test facility in Gujarat itself. But yes, the stock is stuck in a range about 650 to 690 rupees. Raja, what can we watch out for CG Power going ahead?
Yeah, CG Power looks to be contained in some kind of tight spot right now. So there is nothing much to do on the downside. So yes, it is able to survive this decline which is happening in the market. So it could be taken as a contrarian long position because it shows that yes, if it revives from here, then it could be a very swift rise because the stock has spent some time in consolidation and right now the stock is holding above key levels. So it could be a good basket amongst your shorts. So I would say that I would favor a long in this with a potential target towards 730 within the next 2 to 3 weeks.
730. Well, the stock is opened about with 2% gains as well. 683, that is where the stock has been trading right now. But yes, let's also address the first rates coming on your screen. Nifty has opened above that 24,500 levels. Very flat to positive start for the markets. A quiet start for the markets given how the global handover was quite mixed coming in. The US markets were strong. Asia Pacific markets were mixed. Let's take a look at some of the sectoral indices, how they are faring. India Wix, if you look at it, that's eased a bit. 1% decline coming in for the India Wix itself. Nifty Oil and Gas is holding well with about 0.2% gains at this point of time. If you look at broader end of the markets, mid cap and small cap indices, they are also showing some bit of a positive momentum at this point of time. But if you look at some of the top gainers and losers on the Nifty 50, let's take a look. Kotak Mahindra Bank doing well, 1% gains coming in from there. Geo Financial, 0.7% gains coming in for Geo Financial as well. Tata Steel, TCS, Asian Paints, they are some of the top gainers on the Nifty 50. However, on the way down, you can see Shriram Finance once again extending its downward trend to about third consecutive day. 0.6%, 0.5% cut coming in there for Shriram Finance. Apollo Hospitals also not doing well. 0.4% cut coming in there too. Titan with about 0.2% decline. L&T, ICICI Bank, they are some of the other losers on the Nifty 50 as well. But yes, let's quickly address the first query of the day. We have Naveen who's been asking the view on Shriram Finance as well. Shriram Finance, what do you believe, Raja? What can we expect in the next coming days? Because past 3 days, the stock has been exhibiting a negative trend.
Yeah, when you take a look at the finance pack itself, these are some of the associated counters with the bank Nifty and the interim fallout which we have seen and the immediate breakdown below the 600 mark was a clear sign of bearishness which is there. So 600 was a point to exit this counter because the stock did not show much strength thereafter. And even now, yes, the stock is trying to hold out. But then, when you consider the overall scheme of things, the rally could witness more exits from this counter. So, yes, it's not a stock to be bought on dips because the supports are closer towards 550. So that's where you can expect some meaningful support to emerge. And if you have the capital, you can add in there. Otherwise, the rally could witness some sell-off.
Rally could witness some sell-off for Shriram Finance. Let's take another viewer query. Naveen is also asking whether or not it is a better bet to go with Infosys or HCL Tech. HCL Tech is doing well in the trade today. However, Infosys is showing a bit of a dip at this point of time. I know that, Raja, you're a bit contrarian on the entire IT pack, but among the two, what would you prefer?
Uh, Honestly, I would not prefer to go with anyone because the overall, even on the higher time frames, the stocks seems to be struggling at the moment. So the current markets are not showing any significant revival from lower levels at the moment. So yes, if you want to really get into an IT stock amongst both of them, Infi is a better bet. But then I would still have a caveat against the IT sector as a whole.
Okay, caveat against the IT sector as a whole then. Let's take another viewer query. Debuk has been asking the view on Paytm. The stock recently hit its 52-week high as well, and the past 1 month has been quite stellar for the company. The stock is up about 14% itself. But yes, from a near-term perspective, do you expect these gains to sustain or do you expect these gains to extend, Raja, for Paytm?
I expect that these gains would extend every pullback in this stock now. The tenor and the texture of this stock has changed, and it has been attracting a lot of attention from the FIs, from the HNIs, and even from institutions about participating at every lower level. So every dip the stock has seen, the stock is witnessing some buying. So also currently from 1300, it has dropped down to some good set of supports now. So now it could be a good time to enter into Paytm.
Now is a good time to enter into Paytm. Let's take another stock in focus, that is your Muthoot Finance. The stock is exhibiting flat to positive bias at this point of time, given that the company has said that it has infused additional equity into its arm, which is your Muthoot Money, with a total investment of 500 crore rupees through allotment of about equity shares. Well, the stock is up about 20% so far this year, but today the stock has been exhibiting a little bit of a downward trend, 0.1% declines coming in for the counter. Raja, what can we expect for Muthoot Finance going ahead?
Yeah, like I mentioned earlier, the finance counters are all, having a tough job out there. And this particular counter is holding out, but I would say that this stock would need more legs because over the last few weeks, considering the movement in gold, so it's also along with the finance, it is having an association with the commodity gold, and that is what is propelling its price higher. So if you were to enter into Muthoot Finance, and you can see here the stock has moved over the last few months from almost it has gone up by more than 50%. So what I would say is that look to add at current levels and also on dip towards 2300, which would be a good support area. Overall prospect seems good, and the possibility of crossing 3000 by the end of this year seems quite high.
Okay, all right. Let's take another viewer query then. On that note, we have Satvika, who's been asking the view on Bank of Baroda. Well, the stock has been quite range bound in the past 1 month. What can we expect the near term to be, Raja? Can we expect the range bound momentum to continue going ahead?
Yeah, because considering post the RBI policy also, the PSU banks were expected to show some sprite, but we have not been able to see that in especially these names. So PSU banks once again a victim of the lack of movement in the banking space is going to suffer the same scenario. So I would say that holding on to Bank of Baroda is all right, but adding at this current juncture is not a suitable decision which I would advise.
Okay, all right. Let's take another viewer query then. We have Arpan, who has been asking the view on auto stocks, and he's asking specifically for Mahindra and Hyundai Motors for the near-term investment. What is your view on both of these counters, Raja? M&M is still fairly okay, and Hyundai has recently crossed its listing price as well.
Yeah, so when you take a look at both the stocks have been able to do quite well. And yes, Mahindra is faring well, and you can look to invest into both because Mahindra looks quite strong. It has been able to weather the storm, and it has been staging an up move because the auto sector was also another sector that performed well in the August series. And I would say that Hyundai Motor too has been also re-rated by the brokerage houses. So that also is a good bet on the investment side from the cash side. So both are a good play to initiate long.
Okay, both are a good place to initiate a long position. Let's also talk about Electra Green Tech because we have a viewer query by NP Gandhi. He's been asking what is the view on Electra Green Tech for the past, for the near term. Past 1 month, the stock is up about 6%. Today, the stock is also doing well. Percent gains coming in for the counter. If you look at the YTD picture, YTD, if you look at the stock has been fairly range bound. But from a near term perspective, what do you expect, Raja? The stock is trying to make a comeback at this point.
Yeah, the stock had a fair bit of run in 2024, and after that, the stock witnessed some heavy profit booking. And the stock overall has been on the positive side, and with continuous orders being received from the government as well. So the stock has once again showed some positive revival, and the tailwind is acting up now. And the momentum is, like you rightly mentioned, it is trying to inch higher. So this could be a good point to enter into the stock because the overall prospects of the stock remain encouraging even on the higher time frame. So this would be a good bet from the auto space, from the cash side.
Okay, all right. Good space to invest for Electra Green Tech then. Let's take another viewer query. Gopi's been asking the view on textile industries, on how the textile stocks have been faring. Yesterday, we did see that the government has exempted the import of cotton or till about the end of December itself, extending it from September. So, we can see that yesterday we did see Vardhaman Textiles doing quite well. 12% gains came in for the counter. Today, it has fizzled out some of its gains. But from the near-term perspective, what do you believe, Raja? Because the sector has been facing quite a tariff heat in the earlier days.
Yeah, so considering export-driven sector and the kind of verdicts which are coming out, especially outside the Indian domain, so the reaction of the government and the action which is going to happen to protect the export-oriented industries, that's going to take some time, and the severity of this impact to digest and then come out with some solution which is applicable to all, that is going to take some time. So one should not be quick to jump on any conclusion, is my opinion. And we need to see how the government is going to come out with a suitable reply, because this application of additional tariff, how is it going to be? We're going to challenge that. We're going to come out with our own way of working around. So all these things will happen over the next few months, and it's not a day or 2 day kind of an opinion. So the opinion will be formed over the next few days. But at the moment, yes, one should wait and watch and see how the government is going to react, because even the government post its admittance, it will have to work it into the system. So that's what is going to take some time.
Okay, all right. Let's take another viewer query then. We have G Government asking the view on L&T, how the stock is poised for the near term at least. Of course, we did see some pickup in the momentum after the stock delivered a healthy set of Q1 performance, and the management was quite optimistic on its order book outlook for FY26 as well. But Raja, from a near term perspective, how does L&T look like? It has seen a decent run up in the last few days.
Yeah, it came out with stellar numbers, and that helped it to actually move higher. But post that, the stock has got stuck in a range, and this range has been the highs of around 3,700 has not been able to surpass over the last 4 months. So it's going to be a very important level to watch out for, because if it is not going to do that, then it is going to be in the range. So I would say that 3,700 to 3,500 could be a very important range in L&T. So as long as it is within the range, I would advise that if you want to participate above 3,700. And if you are holding a position, move below 3,500 would definitely trigger some downside.
Okay, all right. Let's take another viewer query then. We have Manish Kumar who's asking whether or not we can buy Blue Star at the current levels. Of course, the stock did see some downward trend following its Q1 results, but the recent GST rate cut talks have spurred buying interest in the counter. In the past 1 month, the stock has decently run up. Raja, what can we expect in the near term, given the GST talks are expected to take place next month itself?
Yeah, like I mentioned a few minutes ago, the talks are many, but eventually we got to see the implementation. So yes, market does get excited, and you see those reactions on the prices. That's what we have seen over the last few months, actually. The materialization of the talk into the actual, so it's basically theory versus implementation. So when the implementation happens is when you can actually get into the stock, because getting into stock based on some announcement would not be a right way. But yes, overall Blue Star looks encouraging, and the prospects of moving higher definitely is on the cards. And compared to Voltas, Blue Star seems to be a better bet, and I would say that at the current juncture it's a good buy opportunity.
Okay, at the current juncture, it's a good buy option. Let's also talk about Hero MotoCorp. Paddy's been asking the view on whether or not we can enter Hero MotoCorp stock at this particular price. The stock has seen a good run up in the past 1 month itself, 17% uptick coming in for the counter. What can we expect, Raja? Can the stock expect to sustain its gains going ahead?
So the move which it has seen over the last 2 months, based on some good auto sales number as well. Now I feel that there could be some profit booking at the current juncture. Overall, on a higher time frame, the stock is definitely encouraging, And a dip towards 4600 would be a more appropriate position to get into. The stock, after its sharp sell-off, it is showing some steady rebound. So this could be a good bet from the two-wheeler space on the long side if you're looking from a short-term investment perspective. But then use the dips to buy into, and the dip level would be closer towards 4600 to 4700.
Okay, all right. Let's take another viewer query then. G Comment has been asking the view on ABB, whether or not it is a good bet to buy now for the long term. ABB, of course, the stock has seen a decent correction, 10% downtick in the past 1 month. What would you suggest, Raja? A good price point to enter?
I would say no, because ABB has not given any sign of confidence, and especially the decline in the stock started after the budget, and the fall has not stopped since then. So every rally has seen a sell-off, and now it is entering into a clear declining mode. So I would say stay away, look for a shorting possibility if you are a trader. Otherwise, this is not a time to buy.
Okay, not a time to buy. Let's take one stock in focus. That is your Lemon Tree Hotels. Nearly a percent gains coming in for the counter. The company has signed a license agreement for a new property in Dehradun itself. And the upcoming Lemon Tree Hotel, Dehradun, will be managed by Carnation Hotels, which is an arm of the Lemon Tree Hotels itself. The stock has done well in the past 1 month. Today also nearly a percent gains coming in for the counter. What is the next target level that we can watch out, Raja, for Lemon Tree Hotels?
Yeah, when you're looking at Lemon Tree, you can see that there are other hotel companies also performing well, and this is one of the space, over the last so many years, the entire sector basket has divided into certain other sectors. So now this hotel sector as such has got some more additions into play, and I would say that Lemon Tree has been making steady rounding patterns, and the kind of project new tailwind also it has received yesterday. I would say that the stock has got potential to move towards 225 from an investment perspective over the next 6 months. So it's a good bet to consider.
Okay, all right. Good bet to consider for Lemon Tree Hotels. But with that, we have to let you go, Raja. Thank you so much for your time and connecting with us.
Thank you so much. Bye.
All right, let's take a quick check of the markets before we move on to our next guest of the show. Well, the Sensex and now both of them are mildly in the green at this point of time. Nifty still holding above that 24,500 odd levels. So yes, we are sustaining that levels at this point of time. If you look at the majority India Wix, that has slipped by about 3%. Nifty Auto Index is not doing well with about a percent declines. Majority of the sectors have been, in the negative territory. Apart from Nifty Private Banks, which has been doing well with about a 0.3% gains. On the other hand, if you look at the Bank Nifty index, financials are also doing well with about 0.2% gains coming in therefore as well. However, on the broader end of the markets, they continue their underperformance in respect to the benchmarks. Both the mid-cap and small-cap indices are in the negative territory. But yes, if you talk about the financial freedom and if that's your goal, Super Pro can be a superpower. You can get all the live trading and investment ideas from SEBI-registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp all in one. And right now we have a special financial freedom offer. You can get the annual plan for just 2,500 rupees. Download the Money Control app and subscribe today itself. All right, with that, let's quickly move on to our next guest of the show. We have Dipan Mehta, Director of Elixir Equities, which is joining us right now. Dipan, good morning. Help us understanding what is your take on the markets in the current juncture. We've had earnings season over. Do you believe that the re-rating of valuations at this point of time is justified?
Yeah, good morning and thank you for inviting me on your show. So basically, the market is very finely balanced. On one hand, we have excessive liquidity coming in, which is preventing stock prices from going down. And the stock market is not moving up because of the fundamentals, where we expect that earnings have to move up, earnings have to grow before this kind of sideways movement, which we have seen for the past several months, that can break out on the upside. So it's a fine balance, liquidity on one side preventing the market from going down, and poor earnings growth preventing the market from going up because valuations are pretty much fair.
Okay. Dipan, given that how earning season has panned out, is your FY26 earnings projections changed a bit? Because the street was working earlier with a double-digit earnings growth projection.
See, I think that trying to get into these kind of macro arguments is are not is futile at this point of time. The reason being that there are a lot of steps taken by the government, like income tax cut. RBI has reduced the interest rates, and now we have the GST cut also on the horizon. And one has to really see the effect of all of this, how it plays out in the upcoming festive season and beyond. Until we don't see actual empirical evidence that look, earnings have gone to the next trajectory, I wouldn't like to place my bet that the worst is over and the markets move up from these levels, because in the past also we have been caught blindsided because earnings we thought would move up as we thought for the March quarter, for the June quarter, but that did not take place. So I would just say that a bit skeptical at this point of time, in a wait and watch kind of a zone, and let's see for actual evidence that earnings and consumption have actually gone up before taking a view on the market that it should move up from these levels.
Okay. Given that the government has announced a series of measures, your income tax cut, and of course, like you mentioned about GST rationalization that could take place in the next month itself, do you believe that consumption theme is the no-brainer for the markets from here on? And how would you go about picking about in a consumption basket itself?
You're right. I think consumption has always been one of the most important investment themes in India, and most investors have a large portion of their investments in the consumption theme. Apart from consumption, there's only other theme which is working is the capital goods, and that's also done pretty well. Within the consumption theme, I think that apart from FMCG, we're quite positive on some of the other segments, be it retail, hospitality, travel, tourism. I think all of these should do pretty well once we have overall improvement in the consumer sentiment and even rural growth picks up. So very positive on consumption oriented stocks. And we have a whole host of new generation consumption stocks also, the likes of Zomato, Swiggy, Nykaa, which are all focused purely on rising demand from the average consumer.
Okay. What about the auto theme? Earlier the entire sector was abating all the tariff uncertainty going on. But given the GST talks, you can see ahead of the festive season, majority of the stocks have picked up pace as well. What do you think the next couple of months would be for like auto companies?
See, I think that auto companies are great long-term play, but you need to be selective. And also this thing about GST rationalization, there could always be a sell on news kind of a situation where all the positives have got factored in. So you could have a correction once the actual announcement takes place. Let's not rule that out. But coming back to your question, yes, I think positive on auto, but one should be selective. In the passenger vehicle, we have seen that it's a Maruti which is just going ahead, increasing market share. They have a solid rollout of new models, which is exciting the consumer, exciting the investor as well. So that's one stock we are overweight in as a measure of disclosure. Maruti, of course, will benefit from GST cut, but let's wait for the evidence because there is a sea change in the way the consumer is looking at small cars, and one needs to see whether GST cut will in fact have an impact or not. And when it comes to two-wheelers, I think that if the GST rationalization does take place, then Hero MotoCorp will be one of the major beneficiaries because they are the largest sellers of entry-level motorcycles. But within that pick also our preference is for Eicher Motors, again a stock in which we and our clients are invested in. And I think that that could be a solid outperformer over the next 2, 3 years. So while we are positive on the auto industry, I think it's better to be selective.
Okay. What about some of the auto ancillary players, given that they have also been under the tariff heat because majority of their exports form their top line as well, be it the likes of Bharat Forge or Balkrishna Industries for the matter. How would we approach that? Should we remain on the sidelines for the time being?
No, there's a challenge for these companies. And how can anybody say whether the tariff will be 50% or 25%? And if there is a bilateral treaty, then it can even come down. So I think end of the day, it's a very difficult call for investors in companies like Bharat Forge and Balakrishna Industries. But apart from these two, I think a lot of the auto ancillary companies, maybe Sona BLW also you could add to that list. But apart from these three companies, I think not many Indian auto ancillaries have very big exposure to the US market. And I think that with auto industry doing well, auto ancillary also should do well. Within that sector also, I would go for players which are in the electronic, electrical, lighting, which are basically agnostic when it comes to the type of automotive, whether it is a ICE engine or whether it's EV. And companies that come to mind over here are companies like Uno Minda and Minda Corp, exceptionally great track record, and they're also bang in the middle of this entire premiumization which is taking place within the auto industry, because a lot of their products are going towards making the models more and more premium. And also there's a small cap stock called SGS Industries, which also is in the middle of this premiumization play, which also is a company which we and our clients are interested in. So one has to be selective again in the auto ancillary sector as well.
Okay, okay. Let's also talk, since we're talking about majority of the tariff plays, let's also talk about textile stocks as well. Yesterday, we did see some of the counters saw buying interest after India extended the cotton duty, import duty exception till about December itself. But what is your take on the entire textile stocks? Is it just a temporary breather for the time being until and unless the competitive edge against the other countries gets, aligned?
See, first of all, textiles now is a very small portion of our market, and export-oriented companies just are three or four, like Wellspun, and we have, I think, Indocount. So, of course, their business will be impacted because of the tariffs. Sorry, there's Gokuldas Exports as well, there's PDS as well. But I think that they will reinvent themselves. But in the interim, I think there'll be pain. You may see deteriorating fundamentals, and that's a good reason to stay away from these stocks. As an investor, even at these levels, I would consider exiting them. But let's just wait and see how things evolve. If we have a deal with US and all these things are forgotten, then these stocks will come back, big time, I think.
Okay, okay. But I mean, the India Inc. is hoping that majority of these companies tap into newer markets as of now, given the tariff uncertainty is going on. But where do you see the flows picture to pan out, the FII flows? Because they have been net sellers in the Indian equity market so far at this, in the past couple of months. Do you believe that the situation is going to remain the same in the next couple of months as well?
See, predicting FII flows is extremely difficult. It is not based on any specific parameters or factors. All that we can say is for FIIs, they have the entire globe to invest in. And if they find India relatively more expensive compared to the other markets, then that's how the money is going to flow. And definitely, I think if you see some of the good growth companies, the good quality businesses, where we have visibility of growth, good corporate governance, solid balance sheets, aggressive managements, if you want all of these criteria to be fulfilled, then the valuation of those companies is extremely expensive. And therefore, from that point of view, I think FIs may find it very difficult to deploy large sums in good quality companies at reasonable valuations, which is why I think they are kind of avoiding our markets. At the same time, they're getting underweight India because a lot of the large cap stocks they're invested in, which have delivered great returns to them in the past, we are seeing secular slowdown over there. I mean, look at what is happening in HDFC, ICICI Bank. These companies cannot now grow at 15-20% as they had been in the past decade or so. So they are factoring in slower growth rate, high valuations for their large cap holdings, and accordingly making a rebalancing or readjustment.
Okay, okay. Let's also talk about IT stocks. Earlier in this week, we saw some buying interest. Brokerages have turned out bullish on the counter. They believe that the risk reward is quite favorable over the next 1 year for the counters, given the kind of correction majority of these IT counters have seen this year itself. But would you also play IT as a contra bet?
No, absolutely not. I think IT is a long-term avoid at this point of time. These companies really they haven't reinvented themselves in this kind of situation which we are in just now, where technology, AI, and the kind of trends taking place. I think for the first time, I think that IT companies have been left behind in this particular race. And although they will benefit, but the benefits will far underweigh the kind of other disruption taking place in the traditional businesses. And end of the day, I think base effect is coming into play, and there is always the threat of some action from US as far as services exports are concerned. Valuations okay, are reasonable, they are lower than what they were historically, but look, growth rates have completely flattened out. I think for TCS or Infosys to now say that they can grow even at double digit on a sustainable basis is looking very, very difficult. So I would avoid all large cap IT companies as well. Mid cap, one has to be a bit selective. Still hopeful of companies like Persistent Systems, Tata Elixir, another company in which we and our clients are invested in. that I think there is some hope, I think, because of the kind of position that it is in. And after disappointing numbers for last several quarters, we may see Tata Elxsi kind of do well maybe over the next 2, 3 years or so. So within the IT sector, one has to be extremely selective. The company has to do something unique. It has to have a different business model or a specific niche or a specific positioning. Like look at Mastech, gets most of its revenues from UK. So you have to look for something different within the IT companies to look to justify investments in them. By and large, the traditional IT companies, I think it's best to avoid them.
Best to avoid for the IT companies. Anything else, Dipan, that you're cautious about in the current markets apart from IT?
I think, see, we are generally avoiding all export-oriented businesses, even if they're not exporting to US. Their competitive position in the world does deteriorate because of these events, and we have to be focused on India-centric businesses. I was very, very disappointed with the numbers which came from the banks and NBFCs. We were expecting higher net interest income, higher pre-provisioning profits, and flattening out of the NPA provisioning, but that has not happened. And while banks, especially the large private sector banks, have huge weightage in the Nifty, so from a strategic point of view, investors may not sell. But I'm getting increasingly concerned about large cap banks. The entire banking sector is becoming a bit of a red ocean, and NBFC is also having a tough time. So that's one sector, which I think, which you were very positive on a few months ago because of the RBI rate cut. And there may be another rate cut as well, but I think that long term needs to be a bit cautious on this sector.
Okay. What would your advice be to a fresh investor when they look at markets at the current juncture? That I mean, the first half has been quite volatile for the markets, given that we have already had so many tariff narratives which is playing out. How do you expect the second half could be, and what would your suggestion be for a fresh investor when they approach the markets?
I'm hopeful, eternally hopeful that maybe the worst is over. 50% tariff US, that's the worst case scenario. That also has got priced in now. And a lot of government steps have been taken place to improve the earnings and the economy. I'm hopeful that these will have a very positive impact on earnings, and eventually this sideways movement, this declining trend in small mid caps may get reversed and we could have a good rebound. But I firmly believe that going forward, the next few quarters will be highly selective, and investors' choice of stocks will be very important. So as a professional fund manager, as an investor doing it yourself, I think it'll be challenging times. At the same time, there will be opportunities, but your research skills will certainly be tested.
Stock pickers markets, that's where we are getting all the major narrative from as well. But yes, with that, we have to let you go, Dipan. Thank you so much for your time, and we hope that we connect with you soon. All right, let's take a quick check of the markets, how it's faring at this point of time. We did see a very quiet start for the markets at this point of time, and so far also Sensex is up about 19 points. Nifty still holding. Nifty has slipped below that 24,500 mark as well at this point, flat to negative. That's where Nifty has been trading at. If you look at the majority of the sectors, Nifty Auto down about by 1%. Nifty Metals with about 0.5% cuts coming in there too. Nifty Consumer Durables, yesterday one of the star performers, has succumbed to the selling pressure, 0.3% decline coming in there too. However, the Bank Nifty and the financials play, that is what is holding and limiting the downside for the markets. Bank Nifty doing well with about 0.2% gains, led by the private banks at this point of time. Nifty Realty, however, 0.4% decline coming in there too. And broader end of the markets, they have started to underperform the markets by a much larger margin as well. But yes, if financial freedom, that is your goal, Super Pro can be your superpower. You can get all the live trading and investment ideas from SEBI-registered experts, pre-identified chart patterns, and AI-powered stock alerts on WhatsApp, all in one. And right now, we have a special free financial freedom offer. You can get the annual plan for just 2,500 rupees. You can download the Money Control app and subscribe today itself. All right, with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for Closing Bell. We will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.